Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Wednesday afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq 100 weekly performance. Ryan, it's great to see you as always. Welcome back to Trade Talks. And we see a little bit of choppiness over the past week.
Yeah, quite a bit of choppiness. It's good to be here, Jill. As you look over the past week, QQQ and our Nasdaq 100 ETF, QQQM, down 2.01%. S&P 500 up 0.17%, with S&P 500 value up 2%. So over the past week, this recovery rotation continues. As we saw the 10-year climb, as we saw oil prices continue to climb. And overall, some worries still are persisting around inflation, which I think kind of pulled away from some of the QQQ growthy names. But this morning got almost a validation of, hey, these inflation fears are okay. We saw CPI figures come in month over month up 0.4% in February, which was in line with expectations. As you look at the core CPI, which is ex food and energy, a little weaker than expectations. A month over month increase of 0.1% versus expectations of 0.2%, which puts the year over year figure at 1.3% versus expectations for 1.4%. So we've seen sort of this back and forth in equity markets today. QQQ jumping positive, then dipping back down to negative. Amid the noise, the $1.9 trillion stimulus bill is set to hit President Biden's desk. Includes $1,400 checks to certain households, an extension of unemployment benefits, and also announced that there's an order for 100 million additional doses of the Johnson & Johnson vaccine. So all of this together still points to this reopen recovery rotation that we've been seeing. And as the economy starts to get its legs underneath it, it'll be interesting to see over the next couple of weeks and months how it translates.
Yeah, and I think in New Jersey, today it was announced 50% indoor occupancy, I think starting Friday, March 19th. So we're starting to see these signs where things are coming back on board. But Ryan, when we drill down a little bit more, where are you seeing the sector performance?
Yeah, so I think from a sector standpoint, it's similar to what we've seen over the past number of weeks. Energy up over 6%, financials up nearly 2%. Recall, QQQ does not have exposure to those two sectors, right? But that's consistent with higher oil prices, higher 10-year. You're seeing investors gravitate towards some of these sectors that, frankly, have still been kind of beaten up as you look over the performance longer term. QQQ overweights technology and discretionary. Tech was down over 3% on the week. Discretionary down over 1.5% weighed on relative performance. But I think it's important to kind of see the forest through the trees here. Pullbacks happen. They're arguably healthy for the market, and frankly, we're likely to see them going forward. You're seeing this push-pull in terms of equity markets, and we've become very headline-driven. And as I said, it's sometimes hard to see the forest through the trees. Here, we're just looking at QQQ and the S&P 500. People kind of forget. We saw a reasonably big pullback in QQQ back in September. From September 2nd to September 23rd, we saw QQQ down 12.74% versus the S&P 500 down 9.52%. From that point, September 23rd through the most recent high, February 16th, QQQ returned 27.37%. S&P returned 22.24%. In the more recent pullback, right here from February 16th through March the 8th, QQQ down 10.65%. Mind you, a smaller pullback than what we saw in September, with the S&P 500 down 2.74%. S&P 500 value actually up 3.67%. And then from the 8th through the 9th, you saw QQQ rally over 4%. So, pullbacks, they're going to happen. I think when you look at price action, it's very consistent with a recovery trade, in this case, a reopen trade coming out of a recession where some of these deeper value cyclical names are leading us out of it as we're expecting greater economic growth going forward. I think when you look at Qs and the long-term investing nature of the fund and the underlying companies, right? It's going to be very interesting when we get these R&D statistics and fundamental growth statistics here over the next couple of weeks to look at full year 2020, to see that these companies remain committed to reinvesting in their businesses through R&D, that they've been able to continue to grow fundamentals. And I think from a long-term investing thesis, that's the type of things that you're going to look for. So in the meantime, expect volatility, expect headlines to drive the market, but overall, I think as we march towards this economic recovery, the runway is still pretty long for U.S. stocks.
Yep, all great points, Ryan. A little bit of something for everyone in there, whether you're a trader or looking as a long-term investor to get in at better entry points. So thank you for that reminder that ups and downs do happen in the market. And it's not just always from the bottom left to the top of the right hand of the screen. As always, we appreciate having you on Trade Talks. Thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.